The stock market has been a poop show in the year 2022. The Nasdaq is down over 28% and the S&P 500 is down almost 18% since the beginning of 2022. The Russell 2000 index, which tracks the small cap stocks, has been in the bear market for quite some time now. If you're investing in some of these individual stocks, they're down 50 to 80% from their all-time highs. I haven't seen this much fear in the market since the S&P 500 dropped 38% in 2008, and that was a really bad year with the housing market crashing at the same time. If you ask me if we're in a recession right now, I would say we're in a recession in terms of negative growth in GDP. I need to keep an eye on the unemployment data and see if this is going to become a long-term problem. Not just the stock market, but the crypto market like Bitcoin is down almost 50% from its all-time high. So the question that got everyone asking is if this is the end or if this is just the beginning. And if you don't care about any of these and just want to know about what index funds are on sale, you can skip to the next chapter of this video. But those of you wondering why your investment portfolio is down over 20, 30, or 50%, let me tell you why. And right now, we're still dealing with high inflation, and that's making the Federal Reserve react by raising interest rates and reducing its balance sheet to try to get the prices under control. So raising interest rates could decrease demand in the short term and calm down inflation. But when people stop spending, companies make smaller revenues and profits, right? Making smaller revenues and profits leads to companies laying off their employees. Laying off their employees leads to higher unemployment. When companies don't meet the Wall Street expectations, investors sell their stocks. Now, a lot of these investors use margins to invest, which is to borrow money to invest in these stocks. When these stock prices drop significantly, they get a margin call, okay? And they're forced to sell their stocks to pay off their loans, and you see how everything creates a ripple effect, right? If you're brand new to my channel, my name is Sai and welcome to my channel. So in this video, I'm gonna talk to you about the 5 index funds that are at least 15% off from their all-time high. Just keep in mind that none of this is financial advice. I can't tell you when the bloodbath in the stock market will end, but I can tell you that as a long-term investor who's looking to achieve financial independence and retire early, I've always enjoyed buying stocks at a discount. And make sure to do your own research before you purchase any stocks, bonds, ETFs, or mutual funds. So first, let's talk about the US total stock market index funds. And that index fund is probably the most popular one. And if you have Schwab index funds, the ticker symbol is SWTSX, Vanguard's ticker symbol is VTSAX, and Fidelity's ticker symbol is FCROX. A total stock market index fund is a mutual fund that tracks the performance of the overall equity market. This type of index fund tracks the performance of the overall equity market, including small, medium, and large cap US companies. So VTSAX right now is on sale with a 17% discount. The share price at the beginning of the year was $118, and now it's trading around $97 per share. The last time I saw this much decrease in share price was in March 2020. When I first started investing in this index fund, the share price was around $40 or $50 per share way back in the day. And instead of focusing on the short-term performance, I always focus on the long-term growth, and that's paid off really well for me. And in 2008, my portfolio was down over 40%. And in 2009, my portfolio went back up to 23%, right? So in 2010, it was up by another 13%. So the lesson I learned here was that timing the market was just impossible. So why not just stay in the market? VTSAX has always been the core of our investment portfolio, and we like to invest at least 50% of our portfolio into index funds, and we keep the other 50% into stocks that we believe in for the long term. And VTSAX invests in over 4,000 stocks and holds $1.3 trillion in net assets. And this fund is considered moderate to aggressive on the risk scale, and it primarily focuses on the capital growth for the long-term investment, which is 10 years or more. By the way, you can get our free FIRE resources by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop, and I have all of my stuff on my bookshelf at firesidechat.com/shopping. The other popular index fund that's on sale is the S&P 500 index fund, and the Vanguard's S&P 500 index fund is the ticker symbol VFIAX. If you have Schwab, the index fund's ticker symbol is SWPPX, and Fidelis' ticker symbol is FXAIX. The S&P 500 index is the Standard & Poor's 500 index, which tracks the 500 largest publicly traded companies in the US. So some companies that are in the S&P 500 are Apple, Microsoft, Google, Amazon, Tesla, and Nvidia. The S&P 500 is also down 17% since the beginning of 2022. The stock price for VFIAX was $442 per share, and now it's sitting at $363 per share. While it's down 17% for the last 5 months, it has performed a 13% average annual return for the past 10 years. I also started investing in this index fund when the stock price was around $200 per share. The main difference between the S&P 500 and the US Total Stock Market Index Fund is that the S&P 500 only focuses on the 500 biggest companies in the US. The US Total Stock Market Index Fund is broader with thousands of stocks in small, medium, and large companies. What I've noticed is that their performances are almost identical, both in the short and long-term growth. This is just my personal opinion, but I don't really see much of a difference between those two index funds. Either way, they're both on sale with a 17% discount. By the way, if you need help with your personal finances, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesidechat.com/coaching. The third popular index fund is the Vanguard Real Estate Index Fund, ticker symbol VGSLX. This index fund is down 19% year to date and performed about 8 to 9% average annual return. The price at the beginning of this year was $163 per share. Now it's trading at around $132. This index fund tracks REITs, which stands for Real Estate Investment Trust. These are the companies that purchase and maintain office buildings, hotels, and other commercial properties. And this index fund is a great way to diversify your index fund portfolio, not financial advice. If you have other index funds that tracks equities like the S&P 500, the expense ratio is 0.12% and it tracks over 160 REITs. Some people like this index fund because it pays higher dividends than the other index funds. Next, I want to talk a little bit about the sector ETFs, and the first one is a Vanguard Information Technology ETF. I used to own this ETF, but not anymore when I started picking individual stocks. This tech ETF is down 25% since the beginning of 2022. It was $462 per share, and now it's trading around $340. I remember buying this ETF when it was around $160 per share back in 2018. This ETF is passively managed like an index fund, but only tracks the information technology sector like Apple, Microsoft, Intel, PayPal, Square, and 350 other tech stocks. This ETF was really popular back in 2019 to 2021 when it made 48%, 45%, and 30% in return, respectively. And I remember selling it in November 2020 when I decided to buy individual stocks like Google and Facebook. Right now, this ETF is on sale with a 25% discount. Another ETF that people like to own in their portfolio that's considered riskier is the Vanguard Small Cap Growth ETF, ticker symbol VBK. This one is getting really hammered in the year 2022 with a negative 30% return. This ETF was trading at around $280 a share at the beginning of this year, and now it's trading at around $190. This is a high-risk, high-reward ETF that tracks the small cap growth companies. Whenever we experience a bear market, the small cap stocks always get hit the hardest, but when the market does really well, the small cap stocks can be very, very rewarding. The expense ratio for this ETF is at 0.07%, and the ETF tracks 750 small cap companies based on the CRSP US Small Cap Growth Index. This ETF is on sale with a 30% discount. So let me pull up the list of ETFs on the Vanguard website. Communication Services ETF is down 27%. Consumer Discretionary ETF like Amazon and Etsy is down 29%. Energy ETF, on the other hand, is up almost 40% due to the rising gas and oil prices. And this shows why it's important to diversify your portfolio. The Financials ETF that tracks stocks like Berkshire Hathaway, JP Morgan Chase, and Bank of America is down over 15%. Healthcare ETF was another ETF I used to own, and it's down almost 14%. If you want to see the full list of index funds and ETFs from Vanguard, I will put their links in the description below. Look guys, 2022 is rough, especially for people who are just now starting to invest. I get it if you're feeling discouraged now. I felt very discouraged during the financial crisis in 2008, but the US economy still managed to rebound from a recession. And 2022 marks the end of the longest bull market we've ever had. And I don't really count 2020 because it was the shortest recession ever recorded. When you look at these index funds and ETFs, I want you to look at the longest long-term outlook and see how these stocks perform in the last 5 to 10 years. If you want to know more about how we've been investing to achieve financial independence and retire early, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.